Hey, Michael Hopkins, Seeking Alpha. I'm here with Jennifer Warren, Concept Elemental. We haven't spoken since January, I think. It's been some time.
Yeah, gosh.
Yeah. So today is Monday, April 8th. You're in North Texas in the Dallas area. And I think it was just maybe 45 minutes ago you saw the eclipse.
Yes, yes. I feel like Moses that came off the mountain.
Yeah?
It was really extraordinary. I took some videos of just how it looked. I mean, it got dark and we had cloud cover. And so I didn't know what was, what was going to be visible, but I saw a lot. There was a lot of, just full on blue sky with the sun, both when it was, from the start to the finish, to the finish almost. And I was also running around looking at the ERCOT grid, seeing what
Yeah.
changed. And I've captured a little bit of that. But yeah, and the temperature dropped like 10 to 15 degrees
Oh,
even. And
oh,
and the atmosphere became really spooky and the birds quit chirping and nature was quiet. It was really wild. I almost
oh.
fell up my stairs going up and down to get different views because it became black. And I was like, oh my God, I didn't have the lights on because it's daytime, right? And I have skylights and it was pitch black. Yeah. So
Wow. So it got dark then. Real like it
yeah,
must have
like
been
yeah, like
something
lights
else.
out, blackout, you know, but we had power, because the grid's been planning for that. So yeah.
So do you want to get into the ERCOT stuff right now? What you briefly saw? Um
Yeah, we can do that. And I know that too, we were going to just mention that I've been to a lot of different conferences.
right.
So I have been sort of, beating the bush at different energy conferences. I was in Houston twice, Austin, and then Fort Worth for an energy conference. So literally, that's the area that represents what's called the Texas Triangle. And ironically, I wrote a story about it, and we can get to that too in a minute. And then I've got a few takeaways we can discuss afterwards, from the conferences, just some high level, thoughts. So, but yeah, let's look at these slides because this is cool.
Sure.
Um, so, so
Hmm.
eclipsing. Let me try
Yep.
get going here. So there was even like a conference, because they were really expecting, travel to be kind of, hampered, and so they were really trying to get people to not be driving around and, stopping and looking at the eclipse and all that sort of stuff. So there's been a lot of eclipse mania, I know, all over the country. And this is just a view of, kind of one view showing the path, and Dallas is right in the path. And this is also just another view of, where this total eclipse was going to be happening. And, we were right there in the sweet spot of it. Um, this was the cloud cover that was expected in the path. And but this is the grid. And so this is just showing you what a normal temperate December day is. We have this really diverse energy mix. We have a lot of renewables capacity. We have had for a good, decade plus, a lot more solar coming online. And as you can see on this normal day, we were like 50% renewables. Solar was 15%, wind 40, natural gas a third, coal 10, nuclear 10. So that's kind of what a normal, just sunny day that's temperate, not a bunch of high power demand. It's not like a hot day or a freezing cold day. But this is what happened today. So this morning, um, once the sun started shining, it was 15% solar and 20% wind, 46%, just call it 50% natural gas, then 12% coal, 8% nuclear. And then at 11, it was like 23% solar. So that's when sort of like solar peaked, was like at 11 this morning, 11, 12. And this right here, I'm just kind of showing you, this is all power generation sources. All these little dots with the yellow are solar plants. And then all of the blue is natural gas, and I know that, and then the gray is all wind energy. Oops, what happened here? Okay, so this is just kind of showing
Huh.
the fuel mix of
Yeah.
yesterday. Okay, and so this big swath, so nuclear here, the yellow, coal right there. And then this big swath is natural gas. And you can see how gas demand increases during those peak hours at the end of the day. And then this blue is wind. And then here's solar. So solar, fills in during the day, you know, and then goes down, like when the sun goes down, right? And that is the rub. um, I don't know why this keeps doing this. Okay, and then this is today at 1 o'clock, showing what happened exactly. So let's just look at solar. So here's 1 o'clock. You can see solar power just goes to almost nothing, right? It's just not much. Wind is in there, but it wasn't really a windy day apparently, but what picked up the slack was natural gas. At one point it was almost, I think, 60% of the mix. So this gets to my point, my thesis here coming up in a moment. And this is just outside this is outside. I was walking outside. This is how dark it got, and this is just
Yeah.
some eerie picture I took. So, getting to some of the energy work I've been doing, from this actually a couple conferences in Houston I was at, both energy, one was an energy conference, and then the other one was actually a Canadian government reception where the premier of Alberta spoke, and Alberta is like a mini, it's like a Texas. I mean, they have all the energy resources of Canada there. It's where all their fossil fuel production happens. And in some respects, they're kind of ahead of us on the emissions reduction game. They've been working at it a long time because they've had policy geared that way. But this is just kind of a map showing some of the LNG facilities around the world. The jewel tones are import facilities, and then the warm tones are export. I know it's not a very big map, but just to show, but what it points to is that there's a lot of LNG importing and exporting, and there are more importers than exporters. And if you look here, this bar, this is North America. These are all the LNG plants that are intended to be built. The red is the ones already in operation, and we're where a lot of the action's at. And just so you have context, so the Texas and Louisiana combined were like $315 billion worth of exports, of energy exports in 2022. And that largely did not exist, until we started exporting, in 2015 and 2016. Crude oil, we export like 5 million barrels a day. Natural gas and natural gas liquids, which includes LNG, is this other bar. It's like, 85 billion or something. But where a lot of the action is, where a lot of the growing gas demand for natural gas is emerging Asia. And here at 2023, you can see it's, just a shave over 600 BCM, and then it grows to 100. This is the growth. And it grows like 10% per annum, towards the 2040s. So there's a lot of demand for LNG and gas. Some of this is domestic production, but as you can see, the LNG demand here is this top blue bar. And just to mention, as we're the top exporter in the country. This is a chart from the Dallas Fed when I went to the Texas Economy Outlook. And as you can see, this red line is just US exports, excluding Texas, flat. And of course, this trough is the pandemic, which everybody experienced. But if you include this blue line, which is Texas, look at how those exports grow. That is largely energy. We accounted for 20% of global LNG volumes in 2022. Between Texas and Louisiana, we're 83% of total US energy exports. That is a huge proportion. So it's all happening here at the Gulf Coast, most of it. And our energy exports are up. And this is just to kind of show, I don't want to get into all the deep weeds about this because it's not something I've parsed deeply, but what it's showing is, so the cost economics in the future are such that United States, North American LNG projects are the ones that are going to pick up a lot of this growing demand. That's what this light blue is. That's all North American LNG projects to fill future demand. Because we have lower cost gas, we can build these facilities and everything economically, and so that's really a bullish case for LNG in the future. And obviously one of the huge demand centers is China, and I just wanted to show you this for reference. This is from Shell's LNG outlook. And as you can see, China's gas demand, even by sector, grows, considerably from, 300 plus to over 600 BCM. This is just showing by source, it looks like their domestic production is going to grow some, but their LNG imports, which are the blue here, keeps trucking along, up through 2040. Now, interesting, Russia picks up a lot of this supply. We're here in the blue, and we ramp up LNG exports to China 2025, 2030, and then it kind of goes down, and then Russia picks up the slack. Some of it's pipeline, because it's cheaper, if you can pipe it in, then ship it in. So that's just that dynamic. And then just kind of I was looking at some stocks a little bit, and just energy, S&P triple Q. SMH is the semiconductor ETF, and it's actually its top constituent is NVIDIA. And then AMSA is a midstream ETF that has done quite well. So this is actually 1 year. This is a 1 year look. And Energy Transfer here, the number 2 size midstream firm in the country, has done quite well in the last year. And this FST, which is a little bit blurred out here, this is Vistra. It's a utility. And as you can see, it has really broken out here over the last bit. And part of it is because they just bought this new nuclear capacity, and they're actually located in Dallas. So with the S&P's here, but this is Vistra right here that's kind of broken out. But even the semiconductor, ETF is cooking along as well. I've had that for a while. And this is just looking at it from a 1 month view. And still, what's really interesting is, so XLE represents a lot of the larger, the super majors and the large independents. And that has been doing well over the last month. And we have all these interest rate dynamics and everything that's, I think, and sort of a little bit tighter markets, in oil, and even with natural gas, Chesapeake has, pulled the throttle back. Natural gas producers are, absolutely going to have more capital discipline and production discipline in the future, just like all the majors and, the independents, because, they have to make a profit. So this is the month, and Vistra again just really has taken off. An RIA actually sent me that recently. And this is a 1 month. I've excluded the S&P. I just wanted to look at all this straight up. And AMSA, Energy Transfer, all doing quite well. XLE, the producers, well. And the nice thing about XLE, I mean, it's one way to play it because it's diversified. You've got a lot of super majors, and then, they have upstream, midstream, downstream. So you capture a lot of the, various components of, the oil, the hydrocarbon supply chain, if you will. And then again, Vistra, the breakout here. So now, sort of pivoting a little bit, this is a recent story I just did, and it's focused in the Texas Triangle, which is again this area of Dallas, Fort Worth to the north, and then south to Houston, and then over to Austin. You know, Austin representing more of, you know, sort of the tech sector. You know, it's sort of known for that, you know, high tech industry, semiconductors, all that. A lot of innovation there, universities there, all that. And so this development was just outside of Austin. And it was a huge 33,000 acre development with a bunch of industrial assets that were defunct. It was a defunct aluminum smelter that was Alcoa's, and they shut it down, decommissioned it. This developer bought it, and it was a brownfield mega site. And he's developing it, and so this is what the story's about. But what it represents is sort of like nearshoring the future of development, if you will. It's really an amazing, like, sustainable development, industrial reindustrialization story. And it includes a lot of, I haven't even worked out all the investment thesis, but some of it specifically, oh, and just by the way, that Texas Triangle area is like $2.5 trillion of GDP
Wow.
just in that area. You
Yeah.
know, so it's, you know, it's had a lot of growth over the last decade plus, but it's, you know, Tesla's right there outside of Austin. The Samsung chip plant is being built right there. And this story captures a lot of that trend. So it's a good kind of backgrounder as to some of the things going on. Again, this Samsung doubles down on Texas as US chip center. Literally, I just saw that headline Saturday. And so this right here, this is the day I visited that development. And I flew near the Samsung chip plant. And that's the state of it right now. And initially they were spending 17 billion to, you know, develop this site. And then it grew to 30 billion. Well, you know, just because these things are more expensive than planned, and inflation, all sorts of things. It's, you know, large scale infrastructure, and we'll call this chip plant that, for lack of a better word. You know, they're just really capital intensive, and you get into these projects and there's always overruns. But this doubling down story is now they're planning on spending 44 billion to do this. So in other words, they are expanding their original facility, you know. And what's interesting about the development I wrote about is, you know, there's going to be all these suppliers surrounding this chip plant and all this innovation that happens. So it's really kind of like the future. And it includes energy demand, right? In Texas, you know, we're having to spend $7 billion to add natural gas fired plants for baseload, you know, to accommodate the growth that we have. We're even like 16 gigawatts short. And, you know, and then you factor in all the, you know, AI, quantum computing, the data centers, all of it. You know, one of the numbers that I heard is that this is from a conference in McKinsey, a McKinsey report, is that power generation grows 4% per annum up to 2030, at least, from 1%. We have been flat in terms of electricity demand. You know, we've had very little demand growth for decades. And now, because of, you know, the requirements of computers and tech and data centers and AI, you know, there's going to be this growth of the need for power generation. And this is just a picture of this development. It's called Sandow Lakes Ranch. And it was a really amazing, like, remediation of this site, which was once, like I said, an aluminum smelter and coal mining and coal-fired power generation all together. and it all stopped at one point, and now it's all being sort of, scraped down and changed, and some of it scraped down, and then new natural gas fired plants coming online, and it's really an amazing story. And one piece of it that's in development right now is what's called an advanced manufacturing and logistics campus. And what will be housed there is like both low and high tech manufacturing. So this idea of nearshoring and, shifting supply chains, well, it's really happening, and I've seen it with my own eyes. Um, and I think that was the end. Yeah, I'll
Okay.
stop sharing there. Um,
Certainly a lot going on in that part of Texas. And like you said, it's this big economy. And I think when people generally think of Texas outside of Austin, it's all energy. Of course, if you include Austin in that, then it's not so much. I'm guessing people are kind of surprised how maybe not only how diversified this region is, but how big it is and what a big economic impact it has.
Yeah, no, it's huge. And I mean, there's a reason Tesla set up there outside of Austin. There's a reason Amazon's, I guess they have a second headquarter there. There's a reason Samsung has picked this area. You know, not only, I mean, there's the skills and all that. And then you just have these clusters, these hubs, right, of innovation. And Austin is near that. But then you have Dallas, all the energy producers in Houston and Dallas, the operators. So what underlies a lot of this, though, is energy, right? Um, Access to energy, access to water. You have to have all these basic resources to set up shop, and then you need the skills, the people skills around to make it happen. So, you just can't replicate all this anywhere. And that's why firms want to set up, where there are these infrastructure assets, both soft networks and hard infrastructure networks. So I would say that, in looking at just thematically, I mean, to me, we've talked about energy infrastructure like energy transfer, and I mean, I'm specifically talking a little bit about fossil fuel stuff, and AMSA as an ETF, and but you could also play it with like Shell and Chevron, Exxon. They all are going to have large global LNG footprints, that grow, in the future. So, yeah, include even Fang, Diamondback, with these mergers that I wrote about before. I mean, they're really gearing up for, a good run ahead. So fossil fuels aren't going anywhere, you know.
So let's go back to the conferences and the events you've been to since the start of the year. You've been to Houston, you've been to South by Southwest in Austin, Dallas Fed, Fort Worth. Um, I suppose that a lot of the talk around there is what's happening in the Texas Triangle, but what were some of the other things people were talking about at the conference as well? What are they looking forward to and things that they're watching carefully?
Yeah. So with the Fed specifically, something that's really interesting outside of this triangle area, is that Brownsville and Corpus Christi, these Gulf Coast areas, are booming because of exports, because of the LNG exports and all the networks and all the suppliers that go along with it, right? So that's a bit of a, those are boom towns where they were not boom towns before. So one thing that was specific to this NAPE conference, which is North American Prospects Expo, and it was like 80, I think it was like 8,200 people attended or something like that. It's huge. And I heard specifically from the CEO of Chesapeake, and I just, they merged with Southwestern and to form, a larger firm. And it's a really positive story for natural gas, I think, in the future. And and LNG. I mean, they're really setting themselves up to be like a premier go-to LNG, firm. I mean, they produce natural gas, but they're also going to be, be on that other side of trading and, connected to export markets. The other thing too, and this is just always foremost in my mind, is that the need for base load.
Mhm.
Whatever you think about the renewables, the transition and all that, baseload, 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 going to be met by natural gas. You can build all kinds of solar facilities and, put up some wind turbines, and that'll get you so far, but you cannot get there all the way. Not if you want an advanced technologically driven economy. You have to have baseload. And I heard about an announcement with one of the large oil and gas independents that they are going to be, siting some small scale nuclear modules, in the field, because, it's reliable baseload too, right? There's a intermittency and all sorts of issues connected to the grid with renewables that, and we've talked about this before. We've been, I've almost moved on from that. It's like, that's so old news. Like I'm in the future, like where's it at? And, what do we need? And what are the firms? And that's why I've been really high off of SMH. That's a really nice addition to my energy portfolio. And I've been really amazed with how well U.S. energy infrastructure has been doing. Plus a lot of those have really, they're good income stocks. They pay good dividends, as well. The other thing I would just say is, and this is just from the work I've just done, is that, the nearshoring trend, the tech, the technological innovation is just all around us. And I've seen a lot of that at these conferences as well. For example, there was this one methane emissions firm. They reduce, they're there to help oil and gas with reducing methane emissions. But what they do is they go to the edge of basins and they, set up shop, and like some of their clients are like really big tech firms that want to use stranded assets, that don't have like a lot of pipeline connected to them. So that they're, using that energy efficiently, and not having to siphon off the grid necessarily for all their power. So there's all these like, centralized grid approaches and decentralized approaches that I saw, and it's all real, and it's, but not all of it is like there's a publicly traded company that you could invest in. These are things around the fray. They're going to be bought by big firms, right? These tech providers and these innovative, firms coming up with solutions, to lower carbon emissions largely. That's a lot of what I saw. Not that there's any one firm that you could just publicly traded firm you could buy. They're part of this whole web of activity, and then it's cost, right? But it's also, what's desired, because all these oil and gas firms are having to reduce their carbon footprints, and their greenhouse gas emissions, just no two ways about it. And I'm trying to think if there's anything else that I can speak to. All these mergers that have been happening. And I finally saw a number that said there was like 225 or 30 billion spent last year on mergers in the oil and gas industry. So that's this huge consolidation. And a lot of it has to do with what I wrote about in the last Seeking Alpha article, about tier one assets, and there's just going to be a lot of variation, with tier one and tier two, and trying to be more efficient with resource recovery. That's something that's going to have to happen, will happen over time. So those are some of the main themes, I would say.
So let's talk. We're already more than 3 months into 2024. What are you thinking about oil and gas? Energy infrastructure is always something you talk about. Are we
Yeah.
gonna be talking about the same things here come halfway through the year or toward the end of the year?
I mean, really the setup, just the strength, the general strength, the demand and supply setup for oil and gas producers is good. Um, Midstream follows, you know. So if anything, I'm just kind of I'm on autopilot with what I have and have had for a while. I mean, it's just, the setup is really good. In fact, I've seen a lot of growth, with a lot of these mergers. I already had Fang, Diamondback, and I had Pioneer, and I mean, so done well on that front, including the SMH, the semiconductor. I bought that like a year ago, and that has just performed really well.
Right. Yeah.
And and I'm just trying to watch, because the AI issue and all that, it's constrained by energy. You can't build all this. You can't produce all these chips and everything if you don't have energy. You can't create the data centers that require a ton of energy, you know, and so it's going to require, so it just means there's robust demand, for oil and gas. I mean, a lot of it has to do with the macro environment, right? And I think kind of what's getting reflected with this, where interest rates are going to be holding, at this level probably for a bit, is just that, it builds the same strength case for energy. And I personally, I don't buy small firms anymore. I only have super majors and certain independents. And then I have this AMSA ETF, and then I have some energy transfer because I'm familiar with their assets and I'm familiar with what basins connect to their assets. So I just always play that, which I know, and watching the flows, and those dynamics haven't changed. You still have pipeline constraints in Appalachia, and that sort of thing. So that's driving pricing and all sorts of things. I heard about a lot of that at the conference, the first conference in Houston, the NAPE conference. Really, really stellar presentations, deep in the weeds. So I just feel really comfortable, more comfortable than I have. I mean, yeah, geopolitics is always an issue, and macroeconomic, challenges, if things happen with the economy at large, but I mean, I think the setup too is just that, with India, 7% GDP growth expected for a while. China, they're trying to get out of their malaise. Now they're doing a lot of it with, supply side stimulus, and there's a problem with that. But things look solid. Again, the geopolitics are the big risk, as always. And I'm going to be speaking at a conference next Tuesday, connected to some of that energy and geopolitics. I'm going to once again be with a bunch of Middle East experts, and ones that are really knowledgeable about like Central and Southwest Asia, which borders Russia, China, Middle East. So that's going to be kind of interesting. Um,
So where's this conference again? Is that
Montana. Yeah,
Montana?
I'll be at University of Montana, and it's with the World Affairs Council. And they had one 6 months ago, and they
Yeah.
were going to have it in October, 6 months later, but they decided to move it back. And I'm really glad they did, because I think it's a really great time to be, sort of highlighting everything going on in the world around us. I mean, people need to be really, educated, especially when they're going to be casting their votes in the future, and, that we're part of a big global community, and what happens in the Middle East, what happens in Israel, what happens in Ukraine matters here, and with our energy production, because those are our customers too, our competitors and our customers, so.
Right. You just want to keep this big long-term focus, but things you just got to be flexible too with the short-term things that come up as well.
Yeah, yeah. I mean, and that's why I sort of stick with some of the super majors and the larger oil and gas firms, the larger independents, because they're a little bit more, not bulletproof, but more bulletproof than some. And I mean, of course, there's things that can let some of the air out of the triple Q, some of that. Um, but it's a real mixed bag. And that's the one thing I have been trying to do is just, really sit back and watch, some of the tech stocks, because it seems like there's some divergence, in performance and emphasis. I know there's a lot of emphasis on AI, generative AI, all that. But I'm standing back and going, what are the use cases? What are the constraints? Energy is a constraint. Who can overcome that? Who actually is producing something that people need and can invest in, and will spend the money? What will firms spend the money on? Are they all going to upgrade to GPUs from CPUs? I mean, those are the practical thought processes, to go through. And so I'm sort of hanging back and, like I said, SMH, I'm comfortable with that. Of course I have some triple Q stuff, but I'm not adding, you know, but I'm just sort of holding the fort. I did add some Vistra actually right before the eclipse today, because I was like, okay, I don't usually buy utility stocks, but I really like their direction. And it's quite smart what they're doing. So
Awesome. Yeah. So one last question. Uh, you've got a feature coming in April's the magazine is a
DCEO, yeah, the
DCO?
one that we had yeah, it's out, it's online, it's on my site as well. And it just came out last week. So there's some, discussion about a little bit about chips and that kind of thing. And, what you have to make all this come together, and, we've heard news about, oh, there's going to have to be more government, subsidies and loans to move these supply chains, right? And then there has to be the skill sets to build these facilities and the skill sets to run them, and so everything takes time. And there's demand, right? There has to be demand for this. And yeah, a lot of those semiconductors were concentrated in Taiwan, right? That supply chain was there, and that's why a lot of it's moving here, so that there's, greater diversification of supply chain, because that was what was revealed from the pandemic. It was a weakness, and so that's all being addressed. Um,
Great. Um, I really appreciate the time today to talk, especially on such a big day for you out there in Dallas and North Texas with the eclipse.
no, I know, it was like really like a celestial phenomenon. It's sort of like very, very, very distinct and eerie and cool all at the same time.
Well, I do appreciate you spending the time, today to do that. And I don't like I can't come up with a good pun like not keeping your followers in the dark
Yeah,
today,
yeah, yeah. It sort of eclipsed everything today, right?
shining some light on some ideas and
Yeah,
perspective for the rest of the
absolutely. Let's spotlight energy. All right. Cheers,
cool.
Michael.